What's up, Colorado? I got the crew here with me to go through a bunch of market updates for September. So my name is Chris Lopez. I'm the host of the Denver Real Estate Investing Podcast, and my crew has Jenny Bayless down south with Colorado Springs and Pueblo, Steve and Newt from up north in Fort Collins, Greeley area, Matt and ChrisLawhead for Property Llama and all over the place for investing. What's up, crew?
What's up? Morning.
So, got some new faces in here. We're going to try a new format and just have, spice things up a little bit. So before we get into details for some deals, market updates, I do want to give everyone a heads up that we'll be doing our next portfolio analysis mastermind challenge. We did one at Q4 last year. Had lots of great results. A lot of people ended up, buying, selling properties, moving money around, optimize their equity. We have one coming up in early to mid-November. By the time this is out, details are finalized, but come check it out and review your portfolio. There's a lot of equity out there people are sitting on, a lot of opportunity. Come learn what you can do with that in the market. Plus, if you want to sell, spring season's coming up. That's when you want to start planning now to get a rental property ready to go and all that good stuff to get top dollar. All right. Got the ad out of the way. So, Jenny, what's going on down south?
Just more of the same. So I'm going to sound like a broken record, but I think it kind of, solidifies the points that we've been making over the past couple months. So in terms of, most interesting stats of the month, I would say median sales price was interesting to me because year over year, it's up 3%. So I know we were kind of hitting that like downward trend towards this time last year. We have rebounded from that. It's down a little bit month over month from last month. Sales are down about 5%, but new listings are down 11%. So that was kind of interesting to me that people are just really holding steady. So I thought that was kind of interesting. And then in terms of deals that we're seeing, again, you're probably thinking that, didn't you just talk about this? Well, actually, these are, two new deals that we have going on down here, but they're the same strategy. So we got another Fourplex going on in Colorado Springs, and we have a room by room rental property in Colorado Springs. Kind of similar numbers as before, but I think those are kind of where the opportunities are right now.
Yeah, what's the play on both those? Like, what's the business plan on the room by room? Because sometimes those get creative.
Yeah, so this one's going to be another partnership situation. I believe they're doing DSCR loan on it to be able to buy it in an LLC. And yeah, it's a cash flow monster. Again, they got a pretty good deal on it because it was on the market. They submitted an offer, the seller said, get lost, submitted an offer again about a month later. The seller said, all right, doesn't sound so bad anymore. So persistence was key on this one. And yeah, I think they were guesstimating about a 10% cash on cash return again, but self-management, kind of rolling up their sleeves to do the dirty work to get this thing to perform well. But that's the stage of investment that they're in right now. And then with the Fourplex, kind of the same thing we've all been echoing is that you have to put more down to subsidize, to get it to cash flow. So this individual, I actually saw this Fourplex pop up last night, 2 nights ago, and texted him immediately and was like, oh my gosh, check this out. Like, this is a steal of a deal. So him and Leah got it locked up yesterday evening under contract. So, cause I knew that it fit his
Pueblo
buy box.
or Springs?
Springs. Yeah.
Okay.
It's right down the street from, he and I actually own on the street as well. And it was priced extremely well. And we kind of know what the issues are already going into it. So, it still works out. Obviously inspection, will tell the full picture, but, this one's kind of exciting. I was a little jealous. I had to, control myself not to put in an offer myself on it, I think.
What's got you so excited? Is it just like a really good price, or is there a good value?
The price is amazing. Yeah,
Okay.
The price is amazing on it.
What's the rough cap rate like? I haven't heard you this excited about Fourplex in a while.
Yeah, it's low 6s. So that's kind of exciting, I think.
Wow. Okay.
Yeah. So maybe, in an area that
cap rates are drifting up?
Yeah, it's in an area that I really like. So yeah, I would be pretty pumped for a low 6 fourplex right now, in that street. But yeah, it's pretty cool.
Cool.
What are they putting down on that one?
40%.
Yeah, that happens quite often with those DSCR loans, right? So you're baited by the DSCR that says, hey, whatever, right? Could be 10%, could be 20.
Well, the DSCR was for the room by room rental, right?
Yeah, this is conventional.
Yeah.
The fourplex
Okay.
is going conventional.
Gotcha.
Yeah.
Gotcha.
And he had a pretty decent buy down from his lender. So he's going to pay $4,000 to get 8%, which I can't believe I'm saying that's a good deal, but it sounds pretty good to me.
It's all relative.
Yeah.
But I mean,
Yeah.
those two examples, I think, really highlight a lot of like the general theme up and down, the front range right now is that, hey, you're going to have to put a larger chunk down, which is fine for a lot of people who have, hey, more money, less time. Or, hey, get out there and get creative. And a lot of the creative deals we're seeing out there in the market right now are these room by room type rental properties. So those are two, like, I think, kind of tell the story for everything.
Nope.
You
I'm glad there's room for people with hustle.
Yeah, well, there always is. Like, that's the thing.
there
People
always
say, oh, well, this stopped working. It's like, yes, well, that door closed. That whole like side of the building closed, but there's some doors over here with new opportunities. And I mean, people are out there making 10% cash on cash return right now at 8% or maybe 9 or 10% rate. Heck yeah. So I love it.
Still a way to find a way to make it work.
Well, I think it's good to highlight too, because I mean, a lot of people, listening, it's like, oh, well, I missed the time in real estate, or, it's hard. It's like, well, there's no perfect time. The best time is now if you're getting started. And hey, if you hustle, there's deals out there.
Yeah.
Agreed.
So just a little mindset check for everyone. All right. Let's go up north, Steve.
Similar to Jenny in that, but we've seen, basically prices are a little bit up, so that's good news. Fort Collins has seen some more active listings, and the days on market isn't quite as high as some of the others, so it's actually got a little bit of momentum. One of the few places we've got a lot more new listings is in Windsor, and so that's still a lot of new. What we saw the other day, I think it was a third of houses today are new builds, and so those people that are selling have a reason, but the builders that are still building and having those come online are still selling, and then they've got good deals coming with those. So, so we're seeing a decent, kind of moderate trend. There's like 40, small multifamilies that are on the market between Larimer and Weld, and so those are out there, and they'll either get a good price or they'll stay on the market, and then somebody will get a better price as it ages. And so there's still opportunities out there. It's just a little trickier. I think Newt was saying, it's like some sellers aren't quite coming to the realization that, they're going to have to be a little bit more aggressive on their price to be able to get these to move. And so they're sitting out there, and, that takes energy and time and emotion from people because they're hanging on with them and they're wondering what they're going to do, and their other plans are paused. And if they do the numbers, they might be able to just move that along and then get to the rest of their plan. So,
well, and there's certain builders that are, they still have their affiliations with lenders they're sitting on blocks of loans that still have those interest rates that they can beat out whatever's out there right now.
Yeah.
So that's helpful for those house hackers that want to get into a place and, rent out some rooms. They can still get a fairly decent rate.
Yeah. Yeah. So there's a few out there. I heard of it's like they're out in the wild, but the subject twos, I talked to a friend, and they had some young couple that had gotten a divorce, and they didn't really want to be on the loan, and they weren't really thinking when they got into it. And then they got out, and the company came in and gave them like $5,000 a piece to walk away, and then they're going to settle the loan at 7 years. And it's like, they just don't realize that. And so that's where I think having, the right realtors and the right skill to be able to help them not do that, because they didn't want to be on the property title together anymore, but now they're going to be on it and not be able to buy another place because their name's still attached to it. So, there are some out there that are doing that, but that's a little bit more extreme for people.
Yeah, there's a far and few between.
Yeah, I like how you say it's out there in the wild. Right?
Yeah, it's like, I saw one. Yeah.
It's rare. It's like seeing a wild cat or something.
Yeah,
it's very rare.
I've actually been seeing those on some of the listings I've had. I've had those people reach out, and just from the agent perspective, we just have to educate those sellers on the risk.
Yeah, what they really have at stake. So,
So you're seeing a lot more people ask for it, but not many people do it.
Right.
Yeah. Okay.
Well, everybody's watching Pace Morby,
Yeah.
Yeah.
and
Oh,
there
that
you
looks
go.
so easy.
does look easy,
For who?
doesn't it? Right.
Yeah, just such a tremendous amount of risk, like you're saying, for the person handing that property off. They're still liable for all that. Maybe they don't know that.
Yeah.
Yeah, try to educate them.
You know, if they rent it out and it comes back trashed or they walk away from it, it's still on them to have to do. And so
Yeah.
when they go to like apply for another loan, their name's still on the last one. So it's like, you know, they're going to be, so, you know, it's just kind of one of those caveat emptor is like try and have people be wary. So people on, you know, if you talk to people that are on, you know, your friends and that, you know, really make them look at it and make sure it's the right thing. But because a lot of times it's not.
Yep.
But it goes to the point. I mean, creative deals are getting done.
Yep.
And creative deals will always get done.
Yeah.
So the worst thing you can do if you want to play in this game is to stop, right?
Yeah.
Put your head in the sand, complain about the markets, you know, whine, you know, just deals are getting done. You can put the puzzle pieces together. There's always puzzles to put together.
Well, and, you know, it reminds me of that old book, Who Moved My Cheese? It used to be like about your life in corporate and that, but it really is about if you're watching the trends, if you're staying in touch with things, if you're seeing what's going on, you're going to make an adjustment. If you want to use the exact same strategy for your entire investing career, you're going to hit walls and you're going to get defeated and you're not going to make it. But if you watch and you look and you see where those are at and you spend your time doing that, you're going to find those deals.
Mm-hmm.
And so it's just a matter of where.
Yeah. For money to grow, it has to move.
Yep.
Yeah. Yes. So bring up Denver for a second. I mean, a lot of the same trends. Prices are up a little bit, I think 1 to 3%. But the biggest thing that stood out to me was that year to date, so this is for Denver metro area, we've had about 41,000 new listings. 2019, so before COVID happened, we had 60,000 new listings approximately. So we were down about almost 20,000, or what's that's about a third in terms of like just new inventory coming on the line. So that was the biggest stat that jumped out to me, was just inventory is really, really constrained, which goes along with you know, what we're seeing out there.
Yeah.
I thought it was worse. I thought it was 50%.
I thought it was 50%.
It feels like a 50% transaction crash. But so that's
Well, this is over the year, you know. This
Over
is
the year, yeah. So,
today feels very different than it did 6 months ago too.
Agreed.
Yeah. So let's any other deals to talk about?
So I'm looking at deals with my lending clients all the time. On
Yeah,
a
what type
weekly
of deal?
basis.
What was the last deal you looked at?
I looked at a duplex. We priced out the conventional loan at 8.5%. It didn't pencil. It was negative cash flow. Obviously, that's not the best deal when you're losing money every month. The only way I'm seeing these pencil is potential owner carry, right? And then the owner carry has to be a pretty sweet deal, right? Cut the interest rate in half, or do a nice healthy interest only, you know, for 5 years. Or. So the only way I'm seeing these pencil, and I do see sellers being more open, especially boomers who have paid their properties off. They're more apt to at least consider an owner carry when they're going, oh, you know, and I always frame it like, listen, I'm not a tax expert, but I think if you get $1 million in cash, Uncle Sam might want a healthy piece of that, right? Obviously confirm with your tax guy, or you could do an owner carry where you get a chunk of money now, a smaller chunk of money now, and then you have this quote unquote annuity, right? You've got this regular payment for X amount of years. And we're close to getting one of my buddies done where it's a 10-year, it's a 10-year note on a 30-year AM at 4%. And that's a healthy deal, and it pencils. So if you're trying to get in my humble opinion, if you can get owner carry deals now, that's the only thing I'm seeing penciling. What about you?
I'm not seeing anything pencil, like you're saying, other than bringing 40% down.
Yeah, or that.
I'm talking to more people about, you know, repositioning their properties to sell, people with equity, you know, looking to get into the passive world. So trying to get people to understand, if you have a lot of equity and you're sitting on it, the options that we're seeing with, you know, Property Llama Capital and the funds we're raising for are, you know, positioning some of those assets to sell, get that equity untrapped. And then again, like, where do you go with it? You go 40% down on the duplex or fourplex, or you can get into a fund like Terrence Doyle and make 17% IRR over 5 years, double your money over that 5-year period, and let him deal with the headaches and the roller coaster. So,
well, yeah, clearly, if you're a credit investor, I think that's the biggest opening we see right now is those passive funds, those passive syndications run by top tier operators.
Yeah, so it's what I call the missing middle, right? So you like you say, if you're young and you're willing to hustle and do room by room or house hack, I'm talking to people who are having success with that one, or it's kind of more like you're saying, the passive stuff at the top for accredited investors. And other than that, like you're saying, putting 40% down on something to get close to a break even on cash flow, that's just not a very attractive sounding deal.
It's exactly what we're seeing up north.
Yeah, I've been talking to people about house hacking with their children. We did not. It's a way, when you're my age and you have kids in their 20s, they are not going to be able to amass the down payment, and they can't afford the interest rate on it. So they're going to rent for a decade. But if you have some equity or reserves that you can put in with them and help them qualify, like it qualifies on their DTI. So they will have either a PMI if it's lower or that, but it's set at their rate. But if you have 1 or 2 or 3, sometimes if you can get them to pool their funds, it doesn't seem like what we did when we were kids, because you were kind of shot out of the house and you had to figure out how to do stuff, but it was a different time. So now if you can put a couple of them together to help them not just spend it on rent someplace, but they contribute it to something, a parent can help, or uncles or others can help them get into something, and they can make a difference, and then they can start having that value, because that money's either going to go into a lease, or it's going to go into, paying down some principal, maybe letting the appreciation, and over time, they're going to be better off in that situation. So we're seeing some of that. So people are taking some of their trapped equity and helping their kids.
I really like that client we talked to up north. He did that with his kids. He did a tenancy in common.
Yeah.
And kind of put $125,000 into a house for each of his kids, and got over the gift amount by doing the tenancy in common.
Yeah.
And so I was just like, again, if you're looking for places to put money, I mean, I like investing in my children. I'm planning on doing something like that. I was really happy to hear that strategy.
There's a lot of ways that I think people have to start looking towards to say, I can't do it the way I always did it. And we're just talking about that. So I have to find a way to be able to do it under today's circumstances. And, there may be an interest rate reduction in a year or two, they're still kind of pushing that out. But, to be able to have them look at refinancing at some point, there's things, but to get in now and to kind of get that clock started for them, that's where it's getting more creative. And so I do think that one where the tenants in common is an interesting way too, because, if you do it in joint tenancy, if the parent passes, it just goes to whoever else is left on the title. But if you do it tenants in common, it'll pass down, because, that's that investor's, kind of philosophy.
Yeah, that's cool. Never thought of that.
No, I love it. I think that's a great way. Like, you've done that with one of your kids, right?
Yep.
Yeah.
So, and it's a whole process, because when you take somebody who is in their early 20s, they're not thinking the same thing you're thinking, especially as us as agents and investors. We've got a whole different philosophy on it, right? So we kind of know how the behind the curtain works. Well, they're still kind of just getting out of college, stretching their legs, figuring stuff out, trying to get, quality jobs, get into a good hustle with that. And they're like, oh, I have to learn this whole other process. Well, for me, it's been kind of important to just pass that along with them. So I got everybody in the family one of those, the millionaire next door. It's the next millionaire next door. Because what they see on Instagram and everything else, whether it's the buffs here and they're showing their watch to you, that's not reality. That's not really most people's reality. It's like, but when you see that book and you kind of share it with them, it's not just, oh, dad's preaching to me again. It's, hey, this is the real world. This is research based. You guys need to look at this stuff differently. And they're like, okay. And so I have just been seeding that with my kids for years to be able to say, okay.
Yeah, that's great. We're actually going to record a podcast on that here in a couple of weeks. Yep. So kind of a more detailed step-by-step mini guide will be coming out with steps. And, Steve has done it. So I think it's an awesome strategy. Something else I want to chat with you guys about. So some news came out last week or two in the lending world that on duplexes, triplexes, fourplexes, you now do a 5% down conventional owner occupant. In the past, I think it was 15% down on the duplex and then 25 on a triplex or fourplex, whether you're investor or owner occ. But now, as an owner occupant, aka a house hacker, you can get in those places at 5% down conventional. So I presume that would mean you could stack multiple of those as well. And Jenny, we were chatting about this before the show. I mean, what's your initial thoughts on that?
Oh man, this makes me a little nervous, and I'm probably going to come off as the, curmudgeon grandmother here, but having only 5% down in this interest rate environment on a multifamily, I mean, I have to imagine, blanket statement, most places in Colorado, you're going to be fairly significantly cash flow negative on a monthly basis. And you also have relatively no equity in the property. So to me, that makes me nervous that you would have to budget accordingly to fill that deficit every single month. And, I think house hacking is a great opportunity for newer investors, people that are, trying to get a good foothold in real estate investing. And, chances are you probably don't have several $1,000s disposable every single month to put towards the cash flow deficit to float it. So it just makes me a little nervous unless you're some, master budgeting whiz. I think it would be, I don't know, not super advantageous for most people out there.
Well, it's my understanding too, it needs to be owner occupancy. So you're taking one of those units as yours. You're not getting the cash flow out of that.
Mm-hmm.
Yeah, of all the times to launch that product, I mean, you talked to me 5 years ago, 10 years ago, I'd be like, yes, right? And make no doubt about it, we've been able to do FHA 3.5% down, owner-occupied duplexes, triplexes, fourplexes for a long time. And I've had friends, and clients build their wealth with that, right? They'd buy a fourplex, 3.5% down FHA loan, dial it in, stabilize it, refi into a conventional loan, move across town, do it again, right? And shout out to some of my buddies out there who might be watching this. They some of them are, on the coast of California right now recording albums because of their cash flow is so stout. But I'm with the curmudgeon grandma online here. It gives me pause, right? Especially at this point in the cycle. It's just weird. It comes out now. Like, but nobody asked me.
Yeah, because rates are so high, they're trying to keep liquidity and keep things moving. But yeah, I mean, traditionally, your first-time buyers are the most cash-strapped buyers. The other thing that makes me a little concerned with that, and just like in terms of like being able to get out from under a 4-unit building, well, who are you traditionally selling to? Another investor. What does an investor want? A deal. Whereas if you're repositioning a single-family home, your buying audience is a lot bigger. So that's another kind of concern I would have with that one.
I mean, make no mistake, sometimes real estate investors do deals, they have to exit, and they have to bring money to exit, right? They're upside down.
It happens.
That has happened many times over many years.
Yeah.
Seems like this may be a climate to potentially do that with something like this, potentially.
All right, so I think the consensus is all the same on there. Is little thumbs down as a general tip.
You're not the only curmudgeon, Jenny. The rest of us are
good.
It'll be interesting to see how it shakes out.
Hey, there'll be some really good uses of it. If people use it smartly and find a good deal, there's gonna be some great wins out of there. But not like it was last 10 years of just buy and ride it up. All right, so on to more news. All right, so I think it was like 3 weeks ago, Jenny, we recorded a podcast with Daniel Muldoon. He's a property manager down in Colorado Springs and Pueblo, and also the president of the Colorado Landlord Legislative Coalition. I believe I got it right. They're a political, nonprofit advocacy group that goes and talks to the legislation on Capitol Hill, the state level, and about what's happening to landlords, their voice for landlords. And he is a very, to the point, articulate speaker. And it was a lot of not very happy bullet points, Jenny, is what I would say.
Yeah, but I think he did a fantastic job of just getting to the point what it means for landlords and what the like logistical action steps for landlords. You must do this for your new lease. You must do that. So definitely a must listen for anyone that, manages buy and holds.
So you self-manage. I have a property manager. We were both taking notes during the podcast. What did you go home and do after learning from him? Was there any like, oh, I got to start doing this?
Yeah, I definitely went through my lease template and tried to, figure out what parts I needed to change, what I needed to add to make sure that I was in compliance. And then, obviously a lot of it has to do with more on the advertising side of things. Those are a lot of the new rules that came out was, tenant selection, tenant advertising, what you need to include, what you're allowed to include, that sort of thing. So luckily, knock on wood, I don't have any turnovers coming up. So I have a couple of months to get prepared as to how I'm going to, execute on that.
Have you, any of you guys listened to that podcast yet?
I have.
I did.
And by the way,
what are your thoughts?
Great job, Jenny and Chris, on all of the questions that you were fielding to him. So because they just excuse me, they like specifically the rent or utility bill backs, and just the caps that you're able to charge on top of that. That's people are going to need to know that stuff, and there could potentially be problems.
I think the other one is the stuff that may be coming. Like he's watching outside the I guess the box we have of Colorado, or the rectangle we have, but some of the stuff that's happening in other places, like you could be beholden to a renter in perpetuity if they, enact some of these things that says, you can't have them leave after the term of your lease. They could do, that and further if that trend of what we've got keeps going. So I think it's good to get in and participate and have a voice and make sure that legislators know what's coming, and they also know it from more than their kind of quick back of the napkin creating laws that have adverse impacts on people that are trying to provide housing. I mean, if they want to eliminate that, they will be at a point where they go, oh, we need housing for people. Guess what? Nobody can get in. So landlords, investors create that environment, and they want to be careful not to, throw that out with trying to help. So
you guys listen to it yet?
I've not listened.
No,
to
okay.
it.
I'm just curious.
Yeah, I need to check my email again. Haven't seen that one.
I am. Oh, it just came out a few days ago.
Okay.
I'm unfortunately more than familiar with some of the proposals that Steve's mentioning that are absolutely insane, and there are significant unintended consequences, not only for landlords but for tenants. And you can go to places like New York and see how that rent control is working.
Yeah.
Right? There's plenty of case studies on where this ends and how it ends. So I almost did, I was walking out of the studio when Jenny and you and the gentleman from the advocacy group were starting the podcast. And I'm like, I almost don't want to watch this because I'll just get grouchy and angry. And but I did confirm with my property manager that they're on top of their game. So that's the one thing I did.
So on that note, like I said, it's it's a pretty thankless job, I'll say, doing that type of work, and so they do take donations. After that podcast, I went there and became a member. So I'd really encourage everyone out there to go check out their website. It'll be in the show notes, and review it and probably support them as well, because they put a lot of effort and time into it, and they do a very good job of I think being the voice of the landlords in Colorado.
Landlords definitely need more of a voice with all these changes coming up. Like you say, people in that make the laws need to understand the possible repercussions of these things. So sometimes I think they just get focused on, oh, this sounds like a good idea.
Yeah.
I just hope they're looking far enough down the road.
Well, and in that podcast too, he touched on how, the agency can pass along to the landlord through the property manager that they're using. So that's important too for investors to consider who they're using to manage their property. They need to make sure that they're keeping up on these things.
Mm-hmm.
Yep.
All right, so I'm looking through my agenda here. I got the items on my agenda. You guys got any other topics you want to chat about or throw out there to the panel?
Free money.
Free money.
There's free money. All right. Where's that at? Where's that seminar?
Yeah, right.
All right. So we kind of recap a lot of the stuff here. I mean, if you want all the details on the trends, go to the show notes. We'll have links on the website. You can download the trends packet. There's tons of data on there to read. Just a lot to go over on the podcast. But to kind of recap, prices are slightly up, staying stable. Opportunities are out there. If you're willing to hustle, do some room by room type rentals. Or you want to put down like a 40% down payment to just start getting break even or some cash flow. There are some seller carry options out there. Definitely far and few between, but keep your eyes open for that, especially for someone with a paid off property who's usually more in position to do it. We got some investors out there who are adult investors who are helping their adult children house hack. We'll do a podcast with Steve Medina coming up with that in the near future. Definitely an opportunity all up and down the front range for a lot of property owners who've bought properties the last 10 years. Take one or two properties off the table, take the equity and go reinvest it. A lot of people, myself included, selling properties, going into some like bigger passive deals like the Verco deals. So there's opportunity there to take some chips off the table and go reinvest the equity for you. And on that note, make sure you come out to our Portfolio Analysis Mastermind Challenge coming out in mid-November. We're going to do all sorts of numbers and analyses on there and also have a lot more features in Property Llama. All right, everyone. Well, thanks a lot for coming out. This is a great one.
Thanks, Chris.
Awesome.
Thanks, everyone.